So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling here, 11th of February, 2018. No trade calls, no recommendations, every response for their own stuff because we're here for educational purpose only. So, what's happening? Well, as we go into this week, in terms of the data front, the only thing that will be interesting will be, how all the CPIs come in. But really, it's going to be more to do about how the markets react, how volatility behaves after the extreme moves we saw last week, right? So, hey, guess what? We've been talking about this for a long time. The fact that sooner or later, all those guys trading this volatility, it's like picking up pennies in front of a steamroller, and they'll see some kind of a move that will make people, grown men coil down in the fetal position under the desk. It was just a matter of time, right? Keep in mind there are a lot of people gloating on Twitter all over the place. I made money, awesome moves. The bears have been wrong for an awful long time, right? So I don't think there's anything to really gloat about. And as always, if you make money, there's somebody else losing money, and you're not always going to be making money. So I think the market gods have a way of justicing people who get a little bit too excited. So just keep a level head and focus on your trading. I wouldn't be go out there bragging or putting people down. The only thing I would say is it's always healthy to keep in mind, understand what instruments you're trading, right? And what we talked about was just the even though the bears have been wrong for you can talk years, you'd never got the kind of move you get on the VIX in a day, right? So that's what you have to be aware of. So going into the week, it's a tricky call, right? It's a tricky call because of the way the markets, the equities have been moving. I think a lot of people have never seen the kind of swings that we've seen intraday on the indices, right? And anybody trying to hold a position trades on has seen some pretty wild P&L swings intraday too. So what to watch for? Well, I think the first thing I'd like to comment on is it looks like the world indices, or some of the indices around the world really look like they're broken, right? Or something very, they look in much worse shape than the US, right? So if you see the Hang Seng, look, it's a very, very aggressive move down. You see, China 50, very, very aggressive move. Again, saved by the bell, but the moves have been very, 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 very aggressive, right? So I think that's something to keep an eye out for. Keep an eye out for how, especially Asia opens tonight, right? Look at the Shanghai. Basically, 2017 gains evaporated, right? So the damage there is a lot more aggressive than it has been in the UK. And we'll have to see if Asia bounces after the way, than the US. We'll have to see how Asia opens and if they bounce hard following how US closed. But again, even if you look at something like the DAX, right? So very, very ugly, right? The move's been extremely ugly. If you look at it on a weekly, it's just not an ugly, a lot more damage has been done here. Look at the FTSE. Again, I don't want to go through all of them, but, if you look at FTSE here on the weekly too, a lot of damage has been done. So it's going to be particularly interesting to see how we trade. But I think the first thing I'd keep an eye out for is Asia, right? How Asia opens this week. In terms of and what that means for equities in the U.S., what to look for, I suspect everybody under the sun is going to be looking at this exactly the same way, and I think you could probably call this fairly eloquently both ways, right? So, the bull case. We've come back down. We finally got the healthy retracement. The 200 held like a champ. We rallied aggressively. The bears smacked it down at the 50 back, and you would expect this to be the continuation pattern for new lows. but no way the 200 caught it again and sharp bounce. So as far as the bulls are concerned is, look, we caught it on the first test. The bears tried to smack it down. We caught it again. It's over, right? You know, that's done. They're going to be looking at it the same way. You've got the test on election night. You've got the, what was this? The Brexit scare. You've got this double bottom here in early 2016. It's done and dusted. And there's, you can't argue with that, right? There's a very, it makes sense. I mean, as a side note, I think unless, if you want, you really need to see Apple, Amazon, Boeing really break down hard. If not, they'll stay, the indices will stay stable or try to ramp up again. But basically, that's the bull case. And that's very plausible, right? What the bear case is, well, this is the speed and the velocity of this correction off the highs, right? Is I think we've only seen this about 3 times in history or something like that, very few times. So the speed and the velocity of that move is extremely aggressive. It's fairly unlikely that it's going to resolve that quickly. And because of the shocks in the volatility complex across the board, everybody's going to have to readjust volatility settings, VAR settings, etc. So there's still more positioning, squaring, and rebalancing to be done. And that's not something that's going to be done in a day, because there's a lot of funds, trade, CTAs, etc. that will be doing it daily, but some people may be doing it weekly, monthly, quarterly, etc. So there's still a lot more of adjustments. So we're going to see a whole series of potential spikes here and there, but ultimately we still have to press lower. And this move was so aggressive that we ultimately have to go lower. And that's pretty much the case, whether you want to look at the NASDAQ, the YM, the ES, it's the same thing across the board. So I'm just going to focus on the ES. The base case, so again, it would be too easy if we were going to say, this is the bull case, this is the bear case. I suppose you're watching the video because you want, hey, 50, what do you think is going to happen? Well, what we're going to be working on in terms of assumption is that even if it makes a lot of sense that this is a short-term bottom, we think it's way too early to call this as a long-term bottom for new highs, okay? The way we're looking at this is that as long as we hold inside this 50 DMA and this 200 DMA, it's much to do about nothing. It's a big range, and you could potentially see a lot of very volatile moves and very aggressive moves in terms of velocity, but it's likely the market is going to be looking for position here. It's just buying time, right? It's just buying time. And the longer it holds here, the higher conviction we'll have on which way it breaks, either for new highs we've put in a bottom or for new lows, aggressive puke. What is going to be the tell? The tell, is, as far as we're concerned, number one, watch Asia tonight, see how Asia opens. If Asia clearly can't catch a bid after the way we closed in the US on Friday, then it's probably worrying. You'd expect these lows to get tested. And the other thing into the US Open you want to watch is you got to watch bonds, right? Unless bonds stabilize, it's going to be very, very difficult for this to really stabilize too. And we suspect there's a little bit more downside for the bonds. So that's the way we're looking at it. I know it's not too conclusive, but I think to summarize it would be technically there's a very, very good case for this to be a bottom, and we see a very sharp rally. If you're looking at the context and just maybe, let's just say, a little bit experience or gut feel of looking at all the charts and seeing what happened and how things happened, it feels like it would be almost be too easy, and we still have to resolve. It's a little bit early. I mean, let's be clear. In any case, our base case is not that we're going to see a right now, is not that, you know, this is it, we've started a multi-year secular bear rally is going to start here. That's not at all the case. Our base case is still the same. We think we needed a healthy correction, and so far this counts as a healthy correction. The issue here is with the speed of the correction makes us think that the market still has to rebalance, and there's a little bit more to do, right? And a little bit more to do for us means probably a move back down around this 2400, 2500, 2450, 2450, 2400, right? And should we ever get, which we still think is not outside of the picture, a retest of election night levels in a very ugly move, we think this is potentially gift from the gods in terms of buying opportunities. So our base case really hasn't changed there. Now, if you look at, let's just look quickly at the ZNs. Again, this is what it just, as we've discussed, it doesn't look like they're ready to base yet. And if you see the action towards the end of the day, they got smacked down again, right? So as far as we're concerned, as long as this high holds, we still have more downside. What do we mean by more downside? Well, basically, we still looking for the completion of this move into the 123 extension back towards the, you know, into the 119s, 120s. That's what we're looking for. And we suspect that that's probably, once we get there, that's when we can stabilize and maybe the market can find a little bit more stable footing. So that's what we'll be focusing on. If you look at the dollar, what we were looking for was basically the dollar to bounce a little, right? Thought it would be healthy to see a little bounce. And this is the first big test, right? Those 91s. Because if we can get back above the 91s, then you could argue that there's more to go. And it would still be a corrective bounce, but there's still more to go. But if early in the week we can't get back above these 91s, our base case is still that this was the healthy retracement. We're going to continue getting sold hard, and we're looking for new lows. So again, this is another little piece of the puzzle. And how does that translate on the most important charts? Well, you know, if you look at Aussie, which is probably one of the nicest movers here, is, remember, we're looking for that move all the way back down on Aussie for a nice little retracement. So we're flat on all our swing shorts on Aussie. And the big question here on Aussie, and again, tying in with this dollar move, is either we've based, and this is pretty much the 50 back of the move from A to B, and that's it. That's as much strength that we're going to see on the dollar. The 50 back is going to hold. The moving averages are going to hold, and we're heading back higher on Aussie. Or this is going to be a very aggressive breakdown. It's going to look very ugly, right? That's everything stuck in that pivotal level. So, you know, this is like that 91 zone for the DXY, right? And you can see also in terms of yen, how we're stuck at this extremely important level, right? If it's going to bounce, this is where it's going to bounce. If not, we've got a lot more downside to come in. Now, the other thing which is interesting is if you look at CAD on the daily, is this it on CAD? Back into these moving averages, negative daily close, or are we going to go down? Especially if we get daily closes below the 125, this should trade heavy. And again, it's going to be linked to crude. Remember, we've been talking about crude for a couple of weeks. And as far as we're concerned, the most interesting trade on the board, the most interesting play in terms of asymmetry, and basically was this failure of these highs, and we're looking for a move all the way back into the 155 as we get a very, very sharp unwind of these aggressive and stubborn longs that highs just the way they were getting aggressive and stubborn at lows. You know, you can't make this stuff up. And what's going to be very, very interesting here is how this trades. So remember, if you look at it on the weekly, failure here accelerates through the weekly bull bear line, and once this lets go, the switch is flipped, right? It's just the KO punch. Once it can't hold above this breakout, it's finished. You know, there's no point. It's got to come much lower. And this is what we're looking at this week, and this is what's going to be interesting. Just keep in mind, even though the unwinds can be ugly, you see it tried to base at the 50. The fact that it tried to base and it's getting ugly is, you would not be surprised to see a lot of jawboning here and for it to stabilize. So if we had to make a call, we would not be surprised to see this accelerate lower, but we would suspect that the 100 will offer up a better fight than the 50 did. And ultimately, you know, if this comes down a little bit more, expect to see a little bit of basing, and then the bounce is going to be very telling, because if we come back, then that should be the slap down for the final move back into the 55. So again, the week should be very, very interesting. I can't stress how tricky the call is, simply because of the way we closed on Friday on the equities, right? That's what makes it really, really tricky. So again, in terms of sequence, you gotta watch, you gotta see how Asia opens tonight. That's the first key, right? Then we'll see how Europe opens. I suspect less important, a lot more important to see how Asia opens. And then what do the bonds do into the US Open? Those will likely be the key tells going into the week. So again, wishing everybody an awesome one. Thank you so much for listening. Thank you so much for liking. And if you want me to review anything or post any chart, just hit me up on Twitter. I'll do the best to try and post it on the blog or on the feed. Have an awesome one. Have a great week. Take care, guys. Bye-bye.